welcome to our podcast this week.
Hi, everybody. My name is Jason MacGregor. I'm the co-owner of MacGregor Wealth Management located in Saratoga Springs, New York, and welcome to my weekly market wrap-up. Last week, the U.S. stock markets enjoyed another strong week with the S&P 500 up 2.5%, the NASDAQ was up 4.3%, and the Dow was up 1.8%. The bond market and commodity markets were mostly flat, and as we look back to the action from last week, corporate earnings were mixed. However, inflation data was cooled, which gave the boost to the capital markets. On the horizon this week, it is a big week for corporate earnings with tech-heavy Facebook, Apple, Google, and Amazon all reporting. Eyes will be to see how some of the layoffs and potential reduced ad spending impacts their earnings and their outlooks going forward. Also, starting on Tuesday and then on Wednesday, the Federal Reserve will announce what their interest rate policy is and also what their economic outlook is. After inflation having cooled a little bit here, consensus is only for a 0.25% rate increase, down from 0.5% just a few weeks ago. Anything other than a 0.25%, i.e. a 50 basis point increase, I think would be very negative for the stock market. And as always, what Jerome Powell says during his comments after the 2 p.m. Wednesday announcement is often market moving. If he has a dovish tone, i.e. interest rates are signaled to remain lower, then that could be positive. If he takes a strong hawkish tone, hawkish meaning interest rates go higher or are indicated to go higher for longer, that would be perceived as negative. I kind of feel like I'm in a constant loop here for the last, 6 to 9 months. It is all about what the FOMC, the Federal Reserve, is going to do. Stock market wants lower rates sooner, and the Fed's job is to keep inflation at their target 2%. It's higher than that. So their main weapon is to continue to raise rates until inflation comes down. And how long that lasts, how long before they stop raising rates, take the proverbial pivot, which we keep hearing about, and that pivot would go from raising rates to lowering rates. And that's everyone's guess here. So as always, it's never a dull moment. There's lots of good data coming out this week, and stay tuned to next week to see how things turned out. If you have any questions, please visit our website at mmwealth.com or feel free to reach out directly to our office. Thanks again.
MacGregor Wealth Management is registered as an investment advisor with the SEC and only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. SEC registration does not constitute endorsement of the firm by the Commission, nor does it indicate the advisor has attained a particular level of skill or ability. Information presented does not involve the rendering of personalized investment advice and should not be construed as an offer to buy or sell or solicitation of any offer to buy or sell the securities discussed. Different types of investments involve varying degrees of risks, and there can be no assurance that any investment or strategy will be suitable or profitable for an investor's portfolio. There are no assurances that an investor's portfolio will match or outperform any particular benchmark. All investment strategies have the potential for profit or loss. Past performance may not be indicative of future results. The tax and legal information contained in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation.